My name's Denise Ko Genovese. I'm Associate Editor at Unquote, part of the Acurus Group in London. And I'm here in Cannes at the IPEM Private Equity Conference. And it's an absolute delight to have Nicholas Brooks with us from ICG, Head of Economic and Investment Research, based in London as well, I believe.
Yes. That's right.
Nicholas, I understand that you have given a keynote speech entitled, "Is Europe Heading for a Recession in 2020? Yep. What were the key takeaways for those that couldn't make it?
All right, well, I think the key takeaways are that Europe is unlikely to see a recession in 2020. There are a number of risks that could knock Europe into recession, some very obvious ones, which I'll go through in a moment. But the key takeaways are that we expect to see low growth, low rates, possibly further easing from the ECB. But we think that fundamentally we're going to see a pickup in the global manufacturing cycle, which has really been the weight on European growth in 2019. So to the degree that we see a stabilization in the global industrial cycle and maybe even a modest pickup, that should benefit Europe. So we're not expecting growth to shoot the lights out by any means, but we think that we may see a bump up in growth.
And what are the things, though, that investors that come to you for advice or sort of want to pick your brains about, what are the key things that they're concerned about?
Well, I think that the big concern last year certainly was what was happening in Germany in particular, where Germany came very close to being in recession. We were just seeing very low growth across the board in Europe, and political issues and banking issues in certain countries. Again, going back to sort of our take on it, is if you look at, let's look at Germany in particular, if you look at German growth and you break out services from the industrial side, you'll note that services sector growth has actually been very robust. And that's pretty much the case across Europe. It really was a slowdown on the industrial side. So from an investor's perspective, unless you were in the industrial sector, and in particular in autos and related areas, in fact, growth was pretty strong. But that was one key concern. I think the other, and very much related to that, has been the threat of trade war. So the threat of trade war between the US and China would affect all of Europe, and perhaps even more importantly, and maybe more risk for 2020, is the possibility that the Trump administration refocuses attention on Europe now that it's done a phase one deal with China.
And I know the session isn't about the US, but could you talk a little bit about the US and what the economic situation is there, whether they'll likely go into recession? Because here in Europe, we often look to the US as a precursor to what might happen over here.
Yeah, no, I think the US is in a pretty good place. Private consumption is growing at a pretty stable pace. That makes up close to 80% of GDP. The unemployment rate is near a 50-year low. So business investment has been weak, and I think that's partially tied into the slowdown in the industrial cycle, which I was mentioning, and also I think related to the uncertainty created by fears of trade war. But if you look at consumption, it looks pretty well supported. The Fed is now on pause after having been easing. It's not our base case, but if growth were to dip sharply for whatever reason, whether it had something to do with the recent coronavirus or whether it had something to do with trade wars, the Fed still has scope to cut rates. It still has scope, if it needed to, it's certainly not our base case, to reinstate QE. So there are a lot of supports to the U.S. economy, certainly through 2020. As we move into 2021, things become a little murkier.
Okay, great. And just back to Europe for 1 second. You talked about Germany. What are the other countries that are more concerning for you in terms of a recession and ones to watch?
Well, I think Italy always is one to watch in Europe. A lot of political instability, that seems to be the norm there. That hasn't stopped companies from investing well and making money in Italy. Seems that sometimes what goes on the surface is not really affecting what's going on at the business side, so you have to be careful to distinguish between the two. But I think that that is a bit of an issue in 2020. 5 Star's been falling in the polls. Salvini didn't win the election over the weekend, but Salvini is still the strongest. Salvini and the League are the strongest party in Italy. So it's not clear cut what's going to happen there in the political cyclical side, and of course the banking system there is not in great shape. So I think Italy is always a risk. Again, our base case is that this is not going to lead to any kind of crisis in 2020, but it's one to watch. And I think the other risk, which has just come about, is this coronavirus. And the concern I have is that does it put off the stabilization and the potential increase in the industrial cycle that I have been expecting? To what degree does it affect China and China's growth in the short term? I don't think it's going to be a long-term issue. And to what degree does that mean that data in Europe actually disappoints for a bit longer than originally anticipated? What does that do to financial markets? So that's, I think, something to watch. Again, our base case would be that ultimately we will come through this period and have this low but stable growth. But again, it's a risk that needs to be watched, I think.
And we're based in London. 2 sentences about the UK?
Well, I think the UK is actually looking pretty good at the moment. We've seen a pickup in the employment numbers very recently. Some of the surveys of sentiment, very recent ones since the December election, have improved. We're looking at an unemployment rate near a 40-year low, so that's supporting private consumption, as we're seeing also in the US. Business investment has been weak and will probably remain weak over 2020. But overall, the situation in the UK seems relatively stable. Of course, the big question is what happens after December 31st, 2020. Do we go off a cliff, or do we find some sort of deal that allows for some sort of piecemeal transition phase to go into place? Nobody knows, of course, but that is a big uncertainty, and that's something that needs to be watched as well.
I understand that you at ICG have got a database that tracks private company fundamentals. Can you talk a bit about that?
Yeah, absolutely. So over the past few years, we've built up a database of around 1,400 private companies in Europe and the US. We can track around 500 companies on a quarterly basis. And what we do is we look at what's happening on the earnings side. So we look at EBITDA, we can look at revenue growth trends, we can look at margin trends, we can look at leverage trends, interest coverage. So it gives us a way of understanding what the underlying fundamentals are of the companies that we and others invest in. So it's a very big sample size, so we think it represents private markets quite well. And what we've been seeing is remarkable stability, in fact. So although the macro data was slowing through a lot of 2019, EBITDA growth was actually quite strong or stable. Revenue growth was quite stable. We started to see a bit of a margin squeeze coming through, particularly in the US, but overall, relatively stable growth. On the leverage side, at an aggregate level, we are seeing a leverage increase at a very gradual pace. But the flip side is that interest coverage in both Europe and in the US is near historic highs. So in the US, we're seeing interest coverage come down a little bit. I think it's a function of rates. But in Europe, it's holding near all-time highs. And then on top of that, we track equity cushion, and the equity cushions are near all-time highs. So far, the private companies in Europe and in US seem to be holding up pretty well despite the economic slowdown. And I think that may partially reflect the fact that the mid-market, which is where most of the industry is, tends to be less cyclical than some of the listed companies, so some of the listed indices, and also just the nature of the companies that our industry tends to invest in tend to be less cyclical.
And what's going on in France? Recession on the horizon?
No, I think France is doing quite well. In fact, if you look at the macro data, and actually if you look at our database and we look at the EBITDA and revenue growth, France has actually been surprisingly strong. I think more recently, given the protests in France, I think that may have cause a little wobble on some of the data, but the underlying trend in France has been surprisingly strong.
Nicholas Brooks, ICG, thank you very much.
Thank you.